Hi everyone. Today we're going to be going over a bank reconciliation. So you have a problem in My Open Math that shows you doing a bank reconciliation, and I have set up a problem similar to this one. I just wanted to show you in My Open Math what it looked like. You've got the book side and the bank side, and you've got three slots here for additions and three slots for deductions. However, don't be mistaken that you have to fill in every single one of these. Some of these are going to be left blank, okay? So I have a problem already filled out, already created in Excel, and you can find this problem in Canvas. And so we're going to be doing the bank reconciliation in Excel, and it'll be very similar to the homework problem. It won't be exact, but it will be similar, okay? And so you have the problem here. We're going to do the bank reconciliation for Hughes Company as of May 31st. And the first things you have to do is put what the bank statement balance was as of the end of the month, and you'll get that right off the bank statement. Okay, I've already recapped the bank statement adjustments. And so the bank balance at the end of May was $59,410. And then we look at our general ledger cash account, and we come up with our our book balance as of the end of May as well. And so we compare the two, and we see that there's some discrepancies. The bank says our balance should be $59,410, but on our books it's only $46,783. So we have to figure out why the two are different and reconcile the two. So the first thing you're going to do is put these on your bank reconciliation. And so the bank balance was $59,410, and the book balance is $46,783. Now on our problem here, the book side of the reconciliation is on the left-hand side, and the bank side of the reconciliation is on the right-hand side, but it doesn't matter. It's not like debits and credits where the debits are always on the left and the credits are always on the right. So when you're doing a bank reconciliation, make sure that you're putting the bank side on the right side and the book side on the correct side. So that's the first thing you do, is fill in what the bank said the balance was and what our books say the balance was, so that we can then reconcile. All right, so the next thing says a late deposit on May 31st did not appear on the bank statement. And it's $4,275. So how does that happen? Typically, a bank has a cutoff, 2 o'clock, 4 o'clock, whatever it is. So if you go to the bank after 2 o'clock or whatever their cutoff is, then they're not going to record that deposit until the next day. However, Hughes Company actually did make the deposit on May 31st. So they're going to go ahead and record that deposit on their books. But the bank won't actually process the deposit until June 1st because it wasn't deposited until after their cutoff. So that is going to be a bank reconciliation, and that's known as a deposit in transit. And it's a bank reconciliation side. It's on the bank side because we've already recorded that $4,275 in our books, but the bank hasn't recorded it. So that's all you're trying to do with the bank reconciliation, is figure out what have we recorded on the book side that hasn't been recorded on the bank side, in which case all those things will show on this side, the bank part of the reconciliation. And then what things has the bank recorded that we haven't recorded on our books, and all of those things will go on the book side. And then later, after you finish your bank reconciliation, everything ties down here, both of these will be the same. Then we'll make general journal entries to adjust our book balance, because these would be things that the bank has recorded that we haven't recorded yet and should be. Okay, so that deposit that we have already recorded but the bank has not recorded will be listed as an addition to our bank balance, because as soon as they process it, it will increase that bank balance. And that is known as a deposit in transit. Okay, anytime we've recorded something on the books but the bank just hasn't processed it yet, that's a deposit in transit, and that will add to the bank balance. The next thing we have is we have some checks that we've written that haven't cleared the bank yet. So it says the following checks issued by Hughes Company had not been cashed as of May 31st. And we got two checks, check number 3658 for this amount and check number 3674 for this amount. And it says, hint, when entering these on the bank reconciliation, add them together and only enter the total checks outstanding. So that's what these are called. They're called outstanding checks because we have recorded these checks on the book side, but the bank just hasn't processed them yet. Whoever we wrote the checks to haven't presented them to the bank yet for payment. Eventually they'll clear. It's just a timing difference. Whenever those people actually do go to the bank and deposit them into their account, they'll be presented to our bank for payment, and then they'll clear eventually. So we need to add these two checks together because it tells us to put them as one amount. And there was $43.62 and $32.52 for a total outstanding checks of $7,614. And it's going to be a deduction from the bank. And whenever we have deductions, you'll see this in your MyOpen Math instructions. Whenever it's a reduction, you want to put it as a negative amount. And so those are known as outstanding checks. Eventually they will clear the bank. However, they haven't yet. So we have already reduced our book balance by those amounts, because as soon as we write the checks, we'll reduce our book balance. But the bank hasn't processed them yet, so this balance should actually be $7,614 lower, and eventually it will be whenever those checks clear. Okay? Hope that makes sense. So the next thing says, during May, the bank credited Hughes Company with proceeds, and all proceeds means is they've put cash in our account. Okay, proceeds is just money, of $6,795 for a promissory note which it had collected for the company. The total amount collected included $6,750 for the note, plus interest of $45. So what exactly does this mean? So it means that we had a note that was outstanding for a long time, and so we turned it over to a collection agency. And banks are now performing collection agency functions. They'll have a different department, and you can return it over to them. And then when they collect it, since it's your bank, they'll just put that money right into your bank account. So this means that they have put that money into the account. It's on our bank reconciliation, but we didn't know about these funds until we received a notice from the bank or we got the bank reconciliation. Okay? And so it is included already in this balance. The bank has already put it in there. But until we got the bank statement, we didn't know that that money was in our account. So we have to add that, since it's money that they put into our account that we didn't know about, and it was $6,795. And I'm going to put the description as something like collection of note. And I'm also going to put how much the note was for and how much the interest was. Because when we go, once we're finished doing the bank reconciliation, anything that's on this book side, we're going to have to do an adjusting journal entry. So I need to know how much should go against notes payable, or I'm sorry, notes receivable, and how much should be credited as interest revenue. Okay. The next thing we have to worry about is bank service fees. Bank service fees showed up on the bank statement for $18. So the bank automatically deducts that from your account, whatever their service fees are. But we didn't know how much that was until we received the bank statement. And so again, that $18 has already been deducted from our bank balance, but until we got the bank statement, we didn't know how much that was. So we have to record that as a deduction, right, from our account. We didn't know how much it was, so there's no way we could have already deducted that from our book balance. And so when we make our adjusting journal entries, we will reduce our cash account by $18. And again, because it's a deduction, we're going to enter it as a negative. The next thing says comparison of canceled checks with the check register revealed that one check was written for the correct amount of $1,458, but had been recorded in the depositor's books by $1,539. So whenever the bookkeeper or the accountant recorded this check, they recorded it in our books for the wrong amount. The check had been issued in payment of an accounts payable for office supplies. So the bank processed it for the correct amount because the check was written for $1,458. So whenever somebody presented that to the bank, they recorded it for the correct amount. But when the bookkeeper recorded it in our books, she recorded it for $1,539. Sorry, got tongue-tied there. So the first thing you have to do is figure out what is the error amount. So you're going to take the amount that we recorded it for and subtract the amount that it was written for, the correct amount. So that's $81. And we've already said that the bookkeeper made the error. So it's going to be a book adjustment, not a bank adjustment. The bank did it for the correct amount. So that's when you're looking at errors like that, the first thing you have to determine is, did the bank make the mistake, or did we make the mistake on our side? And it clearly says that the depositor, which means us, we recorded it for the incorrect amount. Then the next thing you have to do, once you decide whether it's a bank error or a book error, is decide, should it be added to the books or should it be subtracted from the books? All right, so this is a check that we recorded for too much, right? We should have only deducted $1,458 from our checking account. Since it's a check, it's going to decrease our book balance, our cash balance. And we actually recorded it for too much, $1,539. So our cash account right now is sitting at $81 lower than it should be. So we need to add that back. Oops. We need to add that back to our book balance. So because when we need to make this correction. And so this was a depositor's error. And I'm going to also write down that it said it was for office supplies. When you're doing this in My Math, you won't put these little descriptions. It'll be just collection of note and depositor's error. But for our purposes, I'm going to put these little descriptions. And when you're actually doing this in real life, you'll want to make little notes like this to yourself too. Because once we're done with the bank reconciliation, then we're going to come through and make adjusting journal entries for all these things on the book side that we found. And in that case, we're going to need to increase our cash account because that check was recorded for too much. So we decreased our cash by too much. And we recorded our office supplies expense by too much. So we'll need to make an adjusting journal entry to adjust both of those, our cash and our office supplies. All right, the next thing says, review of the deposit slips with the bank statement showed that a deposit for $2,250 of a company with a similar account number had been credited to our account in error. So in this case, the bank deposited money in our account that wasn't really ours. And that actually happened to the company my husband and I used to own. I think it was a customer who had an account number that was one digit off from ours. And so when the bank processed it, they put it in our account, in our bank account, in error. And so how do you find this? You're doing your bank reconciliation. You're looking at all the deposits that were on the bank statement. And then you look at your general ledger or your deposit slips. Hopefully you've kept those because that's your record showing you deposited it. And you compare the two. And when you're done, you're like, this $2,250 deposit is on my bank statement, but I don't have a deposit slip for it and it's not in my general ledger. So then you contact your bank and you say, hey, this $2,250 that was on May 15th on my bank statement, I don't have any record of that. Can you do a little research for me? And they'll go back and they'll research it. And then they came back to us and said, hey, that wasn't really supposed to be in your account. It was for another customer. We made a mistake. We're going to take that out of your account. Okay? So that's a bank error. It's not a book error. It's a bank error. And that $2,250 is included in this balance and it shouldn't be. So we need to deduct that from the bank side. And that is going to be, the description is going to be like bank errors, something like that. Okay? The next thing is a $270 check received from one of our customers, R. Petty, as payment on his accounts receivable was returned with the bank statement marked NSF. And NSF means insufficient funds. So they gave us a check to pay against our accounts receivable. We deposited it into our account. And when we did that, the bank automatically gave us credit for it. And now that check has been processed through the customer's bank and it got returned to our bank saying, hey, that customer didn't have enough money in their account to cover this $270 check. So it's been returned to us. When that happens, the bank will automatically take it out of your bank balance. But you're not going to know about it until you get the bank statement or until you get some type of notice from the bank saying, hey, this check was not any good. And they'll typically stamp it with a big NSF, big red NSF on the front of the check. And then what you have to do is you have to contact your customer and tell them to bring you some more money. All right, so that's something that has already been recorded by the bank, but we didn't know about it until we got the bank statement, so there's no way it could already be deducted here. So we're going to need to reduce our book side by $270, and we're just going to put NSF check from our Petty so that we know when we make our adjusting journal entries, we know when we make our adjusting journal entries that we need to put that accounts receivable back on the books, right? Because when we recorded that check originally, when we got it from Mr. Petty, we would have taken that accounts receivable off the books and increased our cash. Now we have to do the exact opposite, and we have to contact Mr. Petty to tell him to bring us some more money. And the last thing is the bank statement showed a credit to the company's account for interest earned on the account balance in May of $450. So sometimes you'll have a checking account that earns interest. And again, this is something that the bank will automatically deposit to your account, and you're not going to know about it until you get a bank statement or you get a notice from the bank. And interest earned is going to be something that increases our book balance. Okay, so that's going to be an addition to our book balance. And that was the last thing. So hopefully we've recorded everything, and hopefully we've caught everything. And I could do all these additions and subtractions in Excel, but I'm going to go ahead and do it on the calculator so that you can see what I'm doing. So the last step is to take the balance, add all these things, subtract all these things, and come up with your adjusted balance. So 46,783 plus the 67.95 plus the 81 plus 450, and then you subtract the 18 and subtract the 270. And so our adjusted balance is 53, oops, in the wrong box, 53,821. Then you have to do the same thing to the bank side. We're going to begin with the beginning balance. We're going to add in that deposit and transit, and we're going to subtract out those two deductions that we found. And 53,821. Hopefully when you're done, these two will reconcile. If they don't, then you got to go back through. Maybe you recorded something on this side that should have been on this side. Maybe you recorded it as a deduction and it should have been an add. Okay, it happens sometimes. And then once we're done, we don't ever record journal entries for the bank side. That's on their books, and or it's a timing difference that will eventually clear. We are going to, however, make adjusting journal entries for everything that we found that the bank had recorded that we hadn't recorded yet, because those things should be included in our book balance and our cash balance. So if we prepare financial statements before we prepare a bank reconciliation, our cash account could be incorrect on our balance sheet. So you have to make sure that you go through, you do your bank reconciliation first before you prepare your financial statements, because if we had prepared our financial statements first, we would show our cash balance as this, but really it should be this, and that could be considered fraud if that is a significant amount difference there. We're going to do the journal entries in a separate video, because in My Open Math you don't have to do the journal entries. It's just a bank reconciliation. So we'll do the general journal entries in a separate video.